DePIN might create more value than Bitcoin has in its entire history. Helium, you guys have a super strong community that when I've been interacting with the Helium community, when we put HIP 142, 143, you could just feel the overwhelming turnover. Like 99% of the community's out there voting. You're like, okay, wow, like that's a lot. That's a great community. So we hope to get to that. The real opportunity is implementing this technology and creating new businesses that just become giant. And if you think about that, then this asset class is going to be way more than 10 trillion. And that value is going to be captured by companies, not commodities. We have every intention to capitalize on what I think is the greatest opportunity in crypto since I started investing in 2012. Like, more value is going to be created now over the next 10 years than what has been created over the prior 10 years. Like, I will die on this hill. Like, there is no question in my mind.
All right, everyone. Welcome back to the Helium High Signal podcast. We have a special one today. We have Santiago Santos from Inversion Capital. Santi, the media tour, circus tour across the world continues. How you doing today?
I'm doing great. Hello, Sam. Thanks so much for having me. Look, the reality is crypto is so overlooked. And as much as I feel sometimes people keep repeating the same message, the more I go and talk to just people that are not constantly on crypto Twitter, you just realize, look, it's going to take pounding the message, which is the reality is DePIN, Helium, and the rest of the category is grossly overlooked within crypto and forget about like outside of crypto. And so you just got to keep at it. And you know, we're not going to be stepping down anytime soon. My role here is to just keep at it and making sure that people appreciate it. And the best part of all of this is there's so much the technology that has been built, and people that may remember Helium, heck, 6 months ago, would be pleasantly surprised by looking at what's going on now. Like the Helium 6 months ago, a year ago, looks very different than the Helium of today. So, anyways, hopefully we can make this a good discussion. Not too repetitive, but any topic is good. So let's get at it.
No, absolutely. And honestly, like, it's funny. I've been in the Helium ecosystem, obviously work there now for a long time. And like, I've been following you guys so closely because I literally had the same thought in my head a long time ago. Like, one of my friend's dads used to work in private equity. I went to him with this message. Um, I'm so excited. So yeah. So for those who don't know, the inversion model, buying businesses, integrating crypto rails to reduce capex and increase revenue per user. We'll get into all that. We really want to focus on something I saw floating around Twitter called the inversion sandwich model, which has two buns and the meat in the middle. So the first piece, user aggregation. The second piece is the DeFi infrastructure and DePIN infrastructure that gets implemented. And then the execution layer that you guys are building at the end. We'll get to that later. But first, the big news of the week announcing the big funding round that you guys had led by Dragonfly. First of all, congrats. How's that feel? And sort of like, what is the first thing you feel like that unlocks for you?
Well, I mean, these are phenomenal partners. You know, obviously Dragonfly immediately got it. You know, we've invested, you know, before starting Inversion, I was heavily investing. I'm thinking one of the most active angels. And so there was funds that I knew very, very well that were like, look, the common denominator, everyone we brought into the partnership is they just have this idea that we don't want to wait another decade to accelerate this. And you're in the trenches, you're investing in infrastructure, and you're like, gosh, like it would really suck if 5 years from now we have the same number of users and it's only the casino narrative thing that gets overlooked. And so yeah, the Dragonfly, we're super lucky to have them as leads. Then we have really talented folks like obviously the EV3 guys, incredibly active,
Yeah.
OG, the first DePIN focused project. We have Parify, which is, you know, the fund that I was at before and still very close with. We have Avalanche because we're building on Avalanche. We have founders from some of the best protocols that we want to be partnering with in this inversion sandwich that we'll talk about. And then just a really number of funds that are going to be super helpful. And I'll tell you one thing, it's very different now being on the other side. Because you know, you hear about this meme around, oh, VC value add. It's real. I'm here to tell you it's very real. And you probably notice it from your standpoint too. It's a very clear divide. And look, there are folks in our cap table that aren't as active, and I'm paying attention to that. So look, you're never going to get it perfect. If you're out there raising around, my feedback would be you're never going to get it perfect, even though people that you think you've known, they show true colors as you go. But by and large, most of them have been extremely helpful. And I'm sitting here and saying, gosh, it's maybe I was too late to the game. It feels better being on this side. The thing that is most rewarding is having not just investors, but more importantly, people that want to join the team and are super mission aligned. And I think, Helium, you guys have a super strong community that when I've been interacting with the Helium community, when we put, hip 142, 143, you could just feel the overwhelming turnover, like 99% of the community's out there voting. You're like, okay, wow, like that's a lot. That's a great community. So we hope to get to that.
And you nailed some of those first hires. I was preparing for this. I read George, you knew how to research his case study that he wrote, and that was phenomenal. So it seems like the talent bar that's coming in early is very high.
I'll tell you one thing, and I saw it from a couple of folks, is you got to hire people to give a shit.
Mm-hmm.
There's no shortage of people that it's level stakes. You need to be smart. You need to have core competency. You need to show well in our case studies and technical interviews. And then there's that other X factor, which is how badly does this person want this thing? A lot of times it's people that I'll trade someone that has slightly less pedigree on paper, but has shown just an insatiable desire, relentlessness to be a part of the team versus someone that may be a little bit more credentialized, but just is not willing to do it, And you can tell it's just a gut check. And honestly, look, hopefully we can find both where you don't make that compromise. People like Suzanne and George and Alvaro and Adam and Lindsay, everyone just has that mission alignment and that dog in them. So
missionary, not mercenary. Yeah, exactly.
Totally.
And I'm curious, before we get into the meat of the discussion, going from investor to founder, what is most surprising to you, that you wouldn't have thought about the transition?
Great question. Most surprising is that it's not too dissimilar, because investing, you're looking for people that have that edge, that have that uniqueness to them. And as a founder builder, you're looking to hire people. So it's the same kind of pattern recognition in people. It's building teams. Either you're investing in them or you're hiring them, but it's still a transaction. And so I think from that standpoint, I wish I would allowed myself to say, hey, look, if you're an investor, you can also be a great builder, and vice versa. You could be a great builder and then turn investor. It's not too dissimilar, is sort of my key observation. And the other one is having very clear, what the most important thing is, because you start something. And when I raised the round, it was just a pitch deck and me. And it was always like, hey, so you're raising the round. Who else is on the team? And you're like, well, just me.
Yeah. Right.
And people knew me from before. And again, I was lucky to have people believe in me super early on. But now that the team has grown, we're now a team of 8. It kind of morphing into what my role is and making sure that I'm doing the most important thing and resisting the temptation to try to do too many things or this anxiety. And I hope we can come back to this concept, and I'll just bring it up here because I do want to focus on this, which is this idea of you hear a lot of stories about the best founders, go hard and momentum is everything and you gotta execute. But I think that look, and I'm here to tell you, look, we have every intention to capitalize on what I think is the greatest opportunity in crypto since I started investing in 2012. More value is going to be created now over the next 10 years than what has been created over the prior 10 years. I will die on this scale. There is no question in my mind. Bitcoin's created 2 trillion and change in value. Dude, that's 2 companies in the public market. The real opportunity is implementing this technology and making and creating new businesses that just, become giants. And if you think about that, then this asset class is going to be way more than 10 trillion. And that value is going to be captured by companies, not commodities, not digital gold, because they have utility. And so, but it's kind of marrying this, what I need to do today versus the 5-10 year plan. And then just staying super focused every morning, waking up, saying, what is the most important thing? And resisting the temptation to try to do too much and not transmitting that anxiety to people in the team, right? I don't know if you feel it internally, but it's in crypto is even more because you're building the open and the community is coming to you for updates and all this stuff. So it adds another layer of pressure. But It's just staying really calm and saying, look, the opportunity's there. It's going to be there. And other people are, yes, going to try to do that. It's a big market. It's a great opportunity. But we need to stay super focused and, 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 and just, it's better to not do things and take more time because you got to slow down. You got to go slow to go fast. And that's something that I just, it's top of mind for me because there are moments in this journey now. We've been almost for a year since I kind of had the idea where I feel like I'm trying to go too fast and force like a forcing function. It's like, no, like slow down, like be thoughtful, methodical, and like not like burn yourself out.
Totally. Especially crypto businesses are hard to begin with because there's the whole token and blockchain aspect, and then you layering on that gets us to our first topic, which is the top bun of user aggregation, right? So obviously at Helium, we're super excited that um, the first type of business I think that you are evaluating is a telco business, and the opportunity to use Helium as a way to reduce costs. I'm curious, like for you mentioned starting with a pitch deck, right? And nothing else. For those in the audience who are like, what is the process like of even starting to evaluate any sort of asset without going into specifics?
Look, it begins and ends with having a deep understanding of what's happening in real time. And it goes back to something we said, like helium a year ago is very different than helium today. And I had the vantage point of investing in this technology and being close to teams. And at one point I was like, look, it feels to me like most of the teams that are failing or not growing as much is because we just don't have enough active users on chain. And then just inverting and saying, well, why is that? Like, why are companies failing? What is it that I definitely don't want to do? Because it's again, like if you're an engineer, I think there's a lot of teams that say, wake up and say, look, DePIN's going to be massive. There's a great opportunity. Let's like switch capex to opex and shift that capex to the community, and you're going to transform infrastructure in the same way that software as a service transformed software in its own right 20 years ago. The question then is, well, wait a minute, before I go and do that, why haven't existing companies in crypto not gained as much traction? Because that's a common question that a traditional venture capitalist that's skeptical on crypto, a Matt Levine and Bloomberg might say, wait a minute, guys, like, okay, we're here talking about this great technology. Why is it that we don't have many more users? Like, why is it that I'm not using this technology? And the insight that I had back then was, and it's core to what we're doing is, let's not build distribution. Let's not build a product and then try to evangelize it and convert people. Let's go the other way around. Let's invert the playbook and say, let's buy business that has distribution, that has trust. And then you layer this technology in a very on the back end invisible manner, right? So to put it concretely, Helium MVNO, it has over 1 million subscribers. It's growing pretty interestingly. And if you look at like quarterly numbers, like relative to traditional
Yeah.
telcos, it's picking up. But look, it's a drop in the bucket relative to other
Yeah,
telcos.
totally.
And so for me, it's like I'd rather buy something at a right price and layer this technology, retrofit crypto on the back end, and that's really the opportunity that we came about. And look, that's core to what we think is there's already great technologies been built in crypto. That's Helium as a first protocol for us was observing what was happening in real time when offloading happened a little over a year ago. And you're saying, okay, there's something interesting here. And you see the offloading stats. Look, they started small. There was like not a perfect start. And then you go talk to AT&Ts of the world, and you go talk to Telco execs. And like, it was really that process for me of just like really getting to, okay, is this real? Why helium? And then like you come up to the realization that maybe you experienced it when you were talking to your friend's dad that runs a private equity fund. Go talk to a telco executive and describe helium to them in non-crypto terms, and they'll say, yeah, this already exists.
Yeah, right.
Large telcos already have their own network of hotspots and they're offloading, and you don't know it, but smartphone technology, a lot, yada 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 yada. And again, that goes back to a core principle, which is it pays to understand what has been tried before, why hasn't it worked to the scale that you think the technology can deliver, and then saying, what can we do differently to really get it to scale? And we just came to the realization that we wanted to have this private equity approach, which is not asking businesses for permission or convincing them, but simply buying them and implementing the strategy, because we fundamentally believe the tech has is matured enough to the point where you can scale that 10x, 100x.
And when you're evaluating, say, any telco asset, right, that you might be interested in, are there any specific like parameters, green flags, red flags that you're thinking about? So, for example, I'd imagine that there's a sweet spot for the number of users that you would ideally acquire, right? Because there's more revenue to be gained via stablecoin rails, et cetera. Potentially more money to be saved, or there could be overhang that you have to deal with. I know a bunch of telcos that I've looked at like have a million entities that own a piece of it. Like, what are some of those things that come up to you in the buying process?
A couple of things. Yes, we skew towards buying larger businesses because the level of effort is exactly the same doing it for a small business and for a
Right.
large business. I've learned that the hard way when I was at SageView. Like, go if you're gonna do complicated transactions, do a bigger one if you can, because you get paid for the work that you're gonna be doing. And so we've looked at businesses with, you're right, at least a million, 2, 5, 10, 20 million users, right? Because that's really, we want to optimize for impact. Again, we think that you can credibly support that type of usage, and these networks can absorb that new active user base. So why wouldn't we go for a small business? Again, if you really believe that offloading is real, in the case of telco, or that stablecoins are really real and can deliver cost savings, of course you're gonna want to go and do a big transaction if you can. And if you don't believe that, then you don't believe the tech is ready. I believe the tech is ready. So I'm going to do a large deal because I want to get paid on the back end, and I want to bring all those users on chain. So it really starts there. There's a couple of other things. Businesses where we can cut costs in the short to medium term with a really high confidence interval. The Helium fits into that, right? For a telco, you can offload.
Yep.
And it doesn't take much to believe that you're going to realize big cost savings. If you're buying $1.50 per gig, and all of a sudden you can get it for 50 cents with Helium, you're not going to offload all of your traffic, but even a small percentage of offloading goes a long way when infrastructure costs account for 50% of the spend, right? So cost saving is bucket number one. The second one is, can we materially change the unit economics of business? These are low margin, deeply unsexy businesses, right? Most telcos have, like MVNOs, have less than 10% margin, operating margin. So again, every incremental 1 percentage point goes a really long way. So business, the common denominator is businesses that have this systemic friction. In the case of telco, and if you're an MVNO, there is a monopoly, duopoly type structure because it's a capex intensive industry to deploy and have these cellular towers. You're beholden to, and you're a sucker for the price, right? And so if in comes Helium and says, no, wait a minute, there's a crowd-funded infrastructure that has reliability and redundancy, and these are the dashboards, and you're like, okay, this is interesting, right? So that breaks that monopoly structure, and it can unlock a lot of value, right? Then all of a sudden the barriers to entry are lower if you can, offload. And then, of course, once you can cut costs of a business, we say, okay, can we upsell that user base to other stuff? And so, okay, if you have their attention on the phone, well, then you can create a digital wallet. And then you have stable coins, and then you have yield opportunities. And so then you become a financial services company. So I'm applying everything that I've learned in my investing career into inversion. Like in couple things, right? You always want to control costs. If you control costs, then you build margin of safety to do other stuff. You never want to underwrite changing consumer behavior. So you never want to assume that people all of a sudden are going to wake up overnight and jump through hoops, create a wallet. No, they value convenience, always will, always have. Don't overthink it. And then the other piece is price really dictates your return here. Like, we're not looking to buy businesses for 20, 30 times. Like, multiples can get out of hand. We load for deeply unsexy businesses. Again, businesses that have stopped growing, are facing these systemic frictions. And then you say, okay, can we rip and replace with blockchain infra? And if that's the case, can we buy it at a good price? And so there's a couple of that's kind of the framework with which we see the world. Of course, it's not just telco. Remittance operators, check the box. Supply chain management checks the box. So a lot of these financial services companies are unfortunately interacting in a financial system that predates the internet. So what do you think is going to happen when you replace that antiquated patchwork of systems with blockchain rails? Like, yeah.
No, totally. I was thinking as well, like I'm sure you'll obviously start and get the first acquisition right, but over time, who knows what other DePIN protocols like you could use. I used to work at Demo. Shout out to the folks over at Demo. They're doing some really interesting stuff with car dealerships. Grupo Kaufman, and like from where I'm sitting, what I've read, these dealerships are getting squeezed on their margins and the ability to understand when they can offer repair services, things like that. I think there's a bunch of exciting leg room for you guys to explore other things down the road.
Well, Sam, it probably seems like you've had my CRM because you best believe when talking to Demo. Shout out to Alex and
Yeah,
Rob,
yeah,
and,
yeah.
and we talked to that group, and we're looked at Hive Mapper, we've looked at GeoNet, like all of these business. This is why DePIN is so overlooked, because it's that category in crypto that when you present it to an industry exec, whether it's telco or any business that is paying for infrastructure, and you present them the opportunity to do it differently with these DePIN networks, they'll really understand it. But crypto native folks just don't get it. They
Yeah,
just
yeah,
don't have enough industry knowledge to appreciate that. Yeah, this is going to be explosive, like explosive. It will create DePIN might create more value than Bitcoin has in its entirety, like its entire history.
agreed. Cool. Moving on. Layer 2, the DePIN DeFi infrastructure in the middle. We kind of got into it a little bit. I want to focus mostly here on the second piece of increasing revenue per user. But first, one more point on Helium. Obviously, the amount of cost reduction comes down to how much any given asset you buy subscribers overlap with a certain amount of hotspots and the duration that people spend at those hotspots. How have you thought about overlaying a potential acquisition with the deployment of hotspots, whether it's you deploying, the community, that whole thing?
Great question, because it goes back to something I said earlier. You want to buy a big telco, because if you're going to deploy the hotspots, then the bigger the subscriber base, the quicker you recoup that, right? And this is something I've said before, which is, imagine a place like Mexico. You maybe can deploy, I don't know, we've done some rough estimates, but like I think anywhere between 25,000 and 30,000 hotspots is enough to cover most of the large metro areas. And I think 30 to 25,000 hotspots I was using like the number of hotspots back in November, December in the US, where you would already have offloading happening. Mexico's a fraction of the size. So like keep that number, 10 million of CapEx, right? And then you say, well, I definitely don't want to buy a small MVNO, because if I don't have enough traffic, it's going to take me longer to recoup that investment. Now, if I'm buying a really large MVNO that is spending 50 million in infrastructure and in data, well, what if I cut that in half? If I offload maybe half of the traffic base, or what if I cut even a quarter of it? So just 10 million that you've invested in capex that year to deploy a network that you own, that you're getting rewards on. So you remove the HNT rewards from that equation.
Yeah,
So
right.
you're spending 50 million in data today buying from this duopoly in Mexico. If you cut down cost by 25%, you're saving $12.5 million that year.
Yeah, right.
So your
Right.
payback on that capex is less than a year. And that's a fairly conservative assumption on offloading. Like, because when you translate it into per gig, you can save it. If you offload everything, you can save, God, what's that? You can save 75% of your entire cost. We get excited about deploying the CapEx. How we think about the deployment is conversations I've had with folks like Josh and LongFi, people in
The man.
the man himself. Like, he's been so helpful. So
He's amazing. Yeah.
we like partnering with folks that have a deep understanding of deployment. This is common in telcos. Like, you have external parties doing the deployment, the servicing, and the maintenance. But I will say, we also looked at traditional partners like convenience stores or tiendas, where you say, hey, listen, guys, can we use your physical footprint to deploy the hotspot? We'll share some of the rewards. By the way, that payback that we talked about, this is a key point that I want to make here, which is when we think about why DePIN networks have this supply sink issue, and the Bitcoin network had it in its early days, which is there's retail. Great, you crowdfunded this network because people bought the hotspot, deployed it in their homes or businesses. They're in the back of the mind, they want to say, okay, I've spent $400 on this hotspot. I want to sell HNT as quickly as possible to recoup that. So if everyone does that, it causes this, especially early on, it causes this volatility in the token, and it's a distraction. So how do you solve that? a lot of what we think inversion, you can think of it as a deployer fund for these networks where we don't have that trigger happiness to sell HNT that we're earning because we have a business in its own right that is saving so much on infrastructure spend that we don't have the need to recoup. We're not a strict capital provider to the network. And the same with the Bitcoin miners. Like if you have excess energy capacity, you have a nuclear reactor or a hydro facility, you're gonna or a nat gas facility, you're flaring that gas. Well, you might as well divert it to mining. So you're not gonna sell that Bitcoin almost immediately because it's just extra. And that I think is going to change the tokenomics in practice for these networks, where you have anchors like Inversion that are deploying the network, accelerating the expansion of the network, but we're a better steward of that supply that's coming online in the market because we don't have to sell it immediately because we're saving so much on the core business.
Awesome. Super excited. Now thinking about the second piece, right, which is increasing the revenue per user with DeFi, stable coins, things like that. There's a lot that could be done there, right? That you could issue your own stable coin. You could use a partner and take part of the yield. You could create a savings account that goes into DeFi, all sorts of things. Are any particularly exciting to you guys, or are you still working through that?
A couple of things. M-Pesa. Go study what Safaricom M-Pesa has done in Africa. Largest telco, largest financial services company. And they haven't used stablecoins. But if they were to start today, they would, right? So again, if you own the user relationship, you're in a better position to convert that user to whatever it is that you want, right? In the telco example, you live with the customer 24/7. So you can offer an incentive and give them data for free to fund a wallet, to receive remittances. And so the other example that I'll use is, Hyperliquid. Hyperliquid is now changing the dynamic of how stablecoin issuers interact with native protocols. Before, protocols like Solana and layer twos had to pay and beg stablecoin issuers like USDC millions and millions of dollars to deploy in their chain. Why is Hyperliquid different? Well, because they have so many users and they own that user relationship and they have the brand. And so now they inverted the playbook. Now you have RFPs.
The RFP, yeah, right.
RFPs. I've always felt like this is a sandwich, right? We'll own the user aggregation layer because we're going to buy businesses where we have a deep connectivity with the user. And then you have the execution layer where you're capturing MEV and all that settlement. And then you have the middleware, right, layer. You have protocols like Helium and Hivemapper and Demo and stablecoin issuers. So we have a preference of like owning both ends of the sandwich. In the middle, we'd rather partner and stitch together the best solution for the end customer because it gets us to map market faster. We want to work with
keeps focused.
Yeah, it keeps us focused. It's also we want to work with protocols that have been battle tested. A lot of times we get asked by investors, "Hey, why Helium? Why not launch your own?" And we're like, "Listen, Helium is battle tested, is working. It's not perfect by any stretch of the imagination, but one of the things that I think they've done very well as of late is that reliability dashboard. So you have companies now having the comfort of AT&Ts of the world saying, "Hey, listen, there's a reliability here on the hotspot side that we feel confident that if we're going to offload, you're going to be there, right? And it's going to be reliable." So yeah, it's open invitation to protocols to come to us and say, "Hey, how can we plug in?" And we like to think of this as the app store experience. We'll show our users a set of products that we think are safe, are value additive, and they won't, right? So it's very curated. Even though the Inversion chain is permissionless and anyone can come and build, you still want to make sure that the users are interacting it in a very safe, reliable way, right? And so that's how we think about kind of really owning the user experience and delivering extreme value to the end user.
Yeah, makes sense because especially when you try to build some of these things in house that are a little more exotic, there's always more to it than you think there's going to be too. And last question, sort of on the middle layer, you often talk when you come on podcasts about Helium and DePIN and then stable coins. I was curious if there was like another niche part of sector that you think could be an important part of the strategy. So for example, I'm a very admittedly small investor in a company called Opacity Labs. And like some of the work they've done is powered, basically what Opacity Labs does is it allows you to sort of port any of your personal data out of a walled garden into another system. And they powered one app that called Earnify that was like top 5 in the Apple App Store for giving early payday loans because they were able to read the person's income coming. And that seems like the exact type of thing you guys could leverage to for on-chain credit. Is there any niche that you're interested in similar to that?
Credit is a huge part of it. Again, it's backbone of stablecoins are this new primitive, which is borderless finance, and that allows you to do a couple things. One, um, offer financial products to users, and it lowers the barriers and the requirements to offer it to them. More importantly, it just creates a more competitive capital market to lower cost of capital for companies. So, like, we're looking to your point, we're looking at a company that does payroll loans, and so there's they have a huge in, clients. They're working mostly with governments, and they have a lot of public sector employees, and those employees are these are small loans, not for them, of course. It's like anywhere from $1,000 to $3,000 loans, US dollar denominated, like loans, and it's like a couple months in duration. Right now they have close to 500,000 workers that they can extend loans to. They can only extend loans to less than 5% of their base because they are capital constrained. Their cost of capital in the traditional financial world, they're not in the US, is like 20%. And you're sitting there, you're saying, well, what can I do here? We have DeFi. Might I be able to borrow on chain, supply that off chain? Default rates are sub 5%. This business has been operating for 16 years consistently. The only handicap of growth to that business is just a super prohibitively expensive cost of capital. You want to get yield on chain? Okay, well, I mean, like you're playing with 20%, and how you can borrow on chain for much less than that. And then that's to your point. We see huge opportunity in credit. Once you have stable coins, then you can do very interesting things. Borrow and lend. You can do BMPL for devices. This is where the private equity model is so important, because if we're going to invest in this business, we're underwriting. We're putting our skin in the game, and that becomes a core tenet of saying, hey, look, we underwrote this deal. We have a ton of value on the line. We feel that this business is going to work. And then we'll plug in it into our Inversion chain saying, hey, there's an opportunity for yield. If you have excess stables, deploy in the vault, we'll borrow for X, and this is a return profile, right? And so it's how we think about capturing value in the entire like inversion ecosystem, right? To really provide lifeblood. Basically, you're creating a capital markets for your portfolio companies, predicated that you can lower cost of capital for a lot of these businesses, and that's going to be unlocking a lot of value.
Totally. And that kind of brings us to the bottom bun, the execution layer. I think that the honestly the sort of like concept for the custom sovereign L1 is the part that probably has been talked about the least in some of the appearances I've heard from you. It makes a ton of sense to me that you guys would build your own custom L1, one for the sovereign block space, and two, candidly, like I've heard you mention this, like if you're doing the work, why not have all the things that come with it financially, the treasury, the MEV, all that stuff. You talk about putting businesses on chain. I'm curious, like what that really entails. Like we've talked about capturing some of the economic activity from the users. Helium Mobile itself actually put the actual business revenue on chain. You could do things like potentially, in a crazy world, actually exit. I guess you said you wanted to own your investments forever, but you can actually exit those investments to a capital base. Yeah, I'm curious, like what is your overall framework for the chain?
You said a lot there that is true, right? At a bare minimum, we're going to post these transactions to the chain and settle them in this record like system database, right? And look, MEV can be substantial, right? I think if you look at a system like Solana, they captured, what was it, over $1 billion of RV last year. The problem I have with that is a lot of that RV is only tied to meme coins and speculation. And look, nothing wrong with that. I've invested in Pump.Fun, a number of protocols. And the issue with that is everyone in crypto is talking about expanding the number of users that come on chain. No one is talking about the retention of those users. And so if you're not offering them anything other than speculation, you're gonna those users are gonna evaporate when crypto prices go down. And so my focus is, I think we can create a very nice stream of cash flow for the chain if we continue to buy businesses that offer core services, right? These are businesses that have been around for a while. They're not going to go out of, like, they're going to continue to provide a core service that people want. And so if we do that well, we'll post those activities over to our chain. And then to your point, yeah, then it's you best believe that those users are going to want some of the things that have really worked in crypto, which is stablecoins and yield and maybe tokenization of stocks, right? We're looking at a lot of businesses outside the US where there's very little financial opportunities. And so as these things come online, things like tokenized stocks and more tokenization of other products, it all really, in my opinion, every business that has really worked at scale becomes a financial services company. Airlines, they don't make money on flights and moving you around. They make money on the credit cards that they offer.
Right. Right.
Costco, Walmart, Starbucks is a very large bank because they have pre-funded gift cards and their Starbucks card that in many cases that money doesn't even get claimed. And so they're clipping the yield. They're basically
Right.
Tether at a smaller scale. And so I think if we do this well, we'll be in a rare category of a chain that, look, profitability might not do that because we may or may not have as much meme coin activity. Maybe we do. I don't know. But it will be really predicated on our ability to find and buy and more businesses, quality businesses that were ripping and replacing this technology and bringing that settlement. And then if we own that user relationship, again, it goes back to that app store experiences. If we stitch together a really compelling value prop, they're going to use stablecoins. They're going to want yield. They're going to want other things to do, maybe NFTs, maybe gaming, a lot of things that have already been built, right? And so I think the North Star for us, let's make crypto invisible. Let's offer real products and services to our end users and deliver extreme value. So we're not going to play the short game of saying, let's spin up a casino, capture most REV, and call it a day. Look, if our users want to speculate and buy meme coins, it's their decision at the end of the day, right? In the same way that you can download certain applications in the App Store, we will want to deliver a same type of experience, right? But in all my time in crypto, I've just learned most users lack financial literacy. Most users don't have the competency to deal with security and vetting and looking at smart contracts and code. So it's going to be incumbent on us and our partners to make sure that we're delivering, vetting applications, and making sure that partners that we're interacting with, are battle tested. Have Lindy to that.
It's gonna be it's gonna be so interesting. And I've never, like, in the US we take it for granted, until I had Helium Mobile, I hadn't really dealt with the distribution of a mobile phone app that I actually go into. So like you have that real estate from the product experience to deal with. So super, super interesting. All right. I wanted to close things out here with a little rapid fire Q&A if you're ready. So what are the core values over at Inversion?
We like to call ourselves a dialectic, fun-loving organization. Dialectic is super important because what that means is that we're not afraid to deliver clear and direct feedback to one another because we want to go far, and we want to deliver feedback on the spot when it happens so that we can learn and that we never do things that compromise our ability to play this game forever. We want to build a forever company. Well, it requires trust and bringing on people that feel extremely comfortable that, Sam, if I'm going to give you feedback, you're not going to take it personally. There's ways to deliver feedback, and I think we can always become better at that. But also, you got to have fun, man. You can be doing a million things. If you're not having fun, people talk about competitive advantage and moats. If you're not having fun, there's going to be someone out there that is having fun, and he's going to compound, and he's going to crush you. Make sure that what you're doing, life's too fucking short to do things you don't want to do. Go do things that you love and that you enjoy doing. And people, I think we ought to have fun. And we're having a lot of fun. So
amazing. In the spirit of the inversion sandwich, what is your favorite lunch sandwich anywhere in the world?
Well, I spent a lot of time in New York. So I think like there's Cats. There used to be a deli right next to JP Morgan. Like, one of those, your local bodega guy in New York. It was that, man. It was like right next to 383 Madison in New York. I would go there every morning, and it was just amazing. So I'll probably be that. I eat so many times there.
Most most tenacious founder you've ever backed.
You know I'm gonna get in trouble, man, because I've invested in over.
Yeah, one of. How about one of the most tenacious founders?
I will say Raj and Toli, man, because they took it to the chin. They were in the trenches. They were, you know, talk about a leader that like leading by example. They got so much shit. Rod Totally, you could see them responding to comments from Ethereum maxis and whatnot. And a lot of things that he implemented in Solana were a direct result of all the hate that he or criticism that he got. And he was like, I think there's two paths: a leader that says, F this, I don't want to entertain this and whatever. And someone that says, you know what, maybe there's something here. And I'll remove the emotion. I'll just look at it and say, maybe we can learn about it. And like local fee markets and a couple of things that Solana ended up implementing. I interviewed Toli in one episode, and he was like, thank you to the Ethereum community because it surfaced a lot of things that we then ended up implementing in Solana. Man, that type of leadership you just don't find. It's rare to find, and I'll always have deep, deep respect for these guys because they, you know,
Beast.
near
Beast.
death experience, like a phoenix rising from the ashes. And a lot of it is where they are today is because they just never give up, man. They're just cockroaches. They're just relentless.
Totally. And I know we're at the top of the hour here, so final one. Next 12 months, what are you hoping to accomplish at Inversion?
We say this internally. We want to buy our first business and prove to the world that crypto is much, much more than speculation. And if we do that well, we'll make crypto relatable, and that's going to have so many implications, positive ones for the rest of the ecosystem, for Helium, for DePIN, for the rest of the industry. So we hope to do that, and I think that's really going to be a stepping stone to everything else that follows.
Amazing. Santi, thank you so much for coming on.